Think back to your time in school. You likely spent years mastering the Pythagorean theorem, memorizing the dates of ancient battles, and perhaps even solving complex calculus equations. But let me ask you a question. Did any teacher ever sit you down and explain how to read a balance sheet? Did they show you how to protect your income from being eroded by inflation, or how the tax code actually works? For most of us, the answer is a resounding no. In the world of asterisk rich dad, poor dad, Robert Kiyosaki identifies this as the greatest tragedy of modern education. We are taught to be highly skilled employees, but we are left financially illiterate. This is the forbidden language, the knowledge of money that the wealthy pass down to their children, while the rest of us are left to learn through painful mistakes. Financial illiteracy is an invisible tax. It's the money you lose because you didn't know a certain tax deduction existed. It's the wealth you never built because you were afraid of a market you didn't understand. Today, we are decoding Lesson 2. Financial literacy is your biggest weapon. We're going to teach you the curriculum that school forgot. Becoming financially literate doesn't mean you need a PhD in economics. It boils down to 4 fundamental pillars. First, accounting. Now, don't let the word bore you. In the world of wealth, accounting isn't about dry math. It's about the ability to read numbers. If you want to build an empire, you have to be able to read the map. Numbers tell a story. They tell you if a business is healthy or if a deal is actually a trap. If you can't read the scoreboard, you can't win the game. Second, investing. This is the science of money making money. It's understanding strategies and formulas that allow your capital to grow. It's moving from the mindset of saving to the mindset of allocating. Third, understanding markets. This is the science of supply and demand. You need to understand the technical side, the data, but also the human side, the emotion. Why is everyone buying this stock right now? Is it based on value or is it based on greed? The rich understand market sentiment and look for opportunities where others see only chaos. Fourth, the law. This is the most forbidden part of the language. The rich use corporations and legal structures to protect their assets and minimize taxes. While an employee earns, gets taxed, and then spends what's left, a corporation earns, spends everything it can legally justify, and then gets taxed on what remains. Understanding the law isn't about breaking rules. It's about knowing the rules so well that you can use them to your advantage. So, how do we take these high-level concepts and use them tomorrow morning? It starts with changing how you view your own life. You need to start treating your personal finances like a business. Every business has a profit and loss statement, a P&L. It shows income coming in and expenses going out. Most people only look at the income line. They think, if I make more, I'm doing better. But a person with high financial intelligence looks at the relationship between the two. Ask yourself, is your income tied strictly to your physical presence? If you stop moving, does the income stop flowing? To apply financial literacy, start by tracking your personal cash flow. For 1 month, don't just look at the total you spent. Look at asterisk where it went. Did it go toward a liability that loses value, or did it go toward an asset that has the potential to grow? When you understand the language of money, you stop saying, "I can't afford it." Instead, your brain automatically switches to, "How can I afford it?" Or, "What asset do I need to buy so that the asterisk asset pays for this?" That shift in vocabulary is the moment you stop being a servant to money and start becoming its master. To speak the language, you need the vocabulary. Here are 5 terms you must know by heart. 1. ROI, return on investment. This is the speed of your money. If you put in $1, how much comes back and how fast? 2. Capital gains. This is the profit you make when you sell an asset for more than you paid for it. Think of it as the reward for your market intelligence. 3. Liquidity. This is how quickly you can turn an asset back into cash without losing value. A dollar bill is perfectly liquid. A house is not. 4. Inflation, the silent thief. If your money isn't growing faster than inflation, you are actually getting poorer every year, even if your bank balance stays the same. 5. Passive income. Money received on a regular basis with little to no effort required to maintain it. This is the holy grail of financial literacy. Memorize these. Use them. When you change the words you use, you change the way you think. School gave you the tools to survive in a 9-to-5 world, but financial literacy gives you the tools to thrive in any world. Don't wait for a system to teach you what it was never designed to show you. Become a lifelong student of money. Read the books, watch the data, and learn the rules of the game. If today's episode helped translate the forbidden language for you, please hit that like button. It helps us reach more people who are tired of being left in the dark. In our next episode, we're going to tackle the most important definition in the history of wealth, the difference between an asset and a liability. It sounds simple, but getting it wrong is the #1 reason people stay broke. Subscribe to Soulverse Cinema and let's keep building your financial intelligence together. I'll see you in the next video.